Hey guys, hope you and the families are doing well. In this video, I'm going to teach you one of my favorite swing trading setups. It's really simple. It's called the Shakeout Demand Tail. Now to do that, I will take you through my trade in Alamos Gold. Ticker for that one is AGI. In my view, it's one of the strongest precious metal miners currently out there, and we've seen some really constructive basing action for a lot of the precious metal miners and a lot of these Shakeout Demand Tail setups. So what I'm going to do is teach you visually what the Shakeout Demand Tail looks like, and then how to use the key daily moving averages as reference points, 10-day EMA, 21-day EMA, 50-day simple period moving average for where to look for these shakeout demand tails to form. Then we'll go into some of the nuances like looking for improving relative strength, bringing the fundamentals in such as the earnings, the sales, acceleration in after-tax margins as we're on the market surge chart, so I can do that. They are today's video sponsor. If you're interested in a discounted trial, you will find a link to that in the description and the comment section below. So let's get straight into what is a shakeout demand tail. So shakeout demand tail is a variation of a type of Japanese candlestick. Now for me, I put it underneath the umbrella of looking for hammer candlesticks, doji dragonflies and takuri lines. So those three candlesticks, hammers, doji dragonflies and takuri lines, for me make up the collection of what a shakeout demand tail is. Now I want to be looking for the shakeout demand tail around a certain moving average on the daily chart. Now it could be a combination of key daily moving averages. So the moving average that I am looking for, okay, is one, the 10-day EMA, which is this pink line that you see. So this is the shakeout demand tail that I targeted through the high. We'll come on to whether you use a buy stop limit order or an opening range breakout technique, but this is the one we're going to talk about here that formed on the 27th of January. I'm then targeting on the 28th as it's moving through the high of the shakeout demand tail. So that's a 10-day EMA. I'm also looking for them around the 21-day EMA. So that's going to be the green line that you see here on the chart. So for instance, this is a shakeout demand tail that forms here around the 21-day EMA. This would be a 21-day EMA shakeout demand tail as well. This over here would be a 21-day EMA shakeout demand tail as well. I'm also looking for them around the 50-day simple period moving average. Now on the market surge charts, that's going to be this red line that you see here. So for instance, here is a 50-day SMA shakeout demand tail. Here is also a 50-day SMA shakeout demand tail. Now what I do like to look for is a strong close, preferably a strong close on the shakeout demand tail. So the hammer, doji dragonfly or takuri line. But when you train your pattern recognition to spot these, you'll just see them everywhere. Okay, there's some here where it's actually just underneath, say the 50-day that's forming over here. If you date back over here as well, you can see numerous shakeout demand tails that are forming over here. But using the key daily moving averages as a reference point, okay, they're useful because I don't want to be chasing a shakeout demand tail up here. I don't want to be chasing a shakeout demand tail up here or up here. You see, here's a shakeout demand tail here, but it's extended from the 10-day EMA. Okay, I'm not looking for the setup up there. That's more so where I'm potentially looking to sell part of the position, going lower the day, selling a little bit into strength. Maybe it's starting to turn around a little bit. Okay, where I'm looking for them is when the stock pulls back in. It could just be it's kind of like a standard pullback, or the stock is basing a VCP, a couple handle, a Davis box, a flag, a wedge, a pennant, whatever it may be. Okay, so if we go on to the setup over here, so it forms the shakeout demand tail on the 27th of January 2025. I'm then targeting it, okay, through the high of that bar on the 28th of January 2025. And you see this nice move that's unfolding, move through the high of this base. Okay, maybe here a little bit short term extended pullback may create another opportunity. There's a couple of subtleties here as well. Okay, so the stock's building a decent sized base, okay, multi-month consolidation, as were many other precious metal miners. It's kind of a VCP look right to it. Okay, a volatility contraction pattern. What do you see? We have one contraction here, bounce high low, two contraction here, you kind of get a third contraction here, and then a little bit of a fourth one as it kind of runs up, pulls back in. Again, commodity stocks will tend to mean revert a fair bit as well, so I'd rather trade these type of setups on pullbacks as opposed to chasing strength on these. Okay, something to note here, this is the relative strength line, this blue line. Okay, now this is versus the S&P 500. So you can see here, okay, the date of the entry is going to be on the 28th, but leading up to that on the 27th, what do you see with this relative strength line? Well, there was relative strength and emerging relative strength of AGI versus the S&P 500. Now this is interesting because for me, as I see this large base building out, what I'm noticing here is there's improving relative strength in this specific stock, being Alamos Gold, but there's also improving relative strength in the group. So you could look at, say, GDX, but you could also look at other precious metal miners, maybe Agnico, so AEM, I Am Gold Corporation, you've got Kinross Gold as well, some of the other leaders there, where you can also see the relative strength coming through. So for me, I'm going, this is interesting. There's emerging relative strength coming through, decent sized bases. I'm pretty bullish on gold. It's a bit short-term extend up here, it's made all-time highs, but I think the fundamental bull case for gold is strong. I think the technical kind of play recently is strong for gold. Again, it's short-term extended, looks a little bit like this in all-time high territory. I'd expect a pullback. So what I'm doing there is, okay, I'm aware of the bigger picture, but I'm aware of this emerging relative strength. So then I'm looking for the shakeout demand tails, okay, that form either around the 10-day, the 21-day, or the 50-day, or potentially a clustering of those key daily moving averages. Then what I like to look for as well is EPS estimates going into all-time high territory. This is just a little bit of a subtlety, but looking back over the last 7-8 years or so, what I like to see is the annual EPS going into all-time high territory. Preferably the estimates are up for this current year, next year as well. Even better if the forward guidance is being raised instead of decreased. So this little down arrow here, this red arrow means that they've been decreased. I'd rather see a green arrow, make it even better, indicate forward guidance as being raised. But if you take a look here for Alamos Gold, okay, 2017, the company reports 4 cents a share, the annual EPS earnings per share, and then 5 cents, 21 cents, 39 cents, 41 cents, 28 cents, 53 cents. Are you ready? 80 cents, $1.22. Real acceleration coming through in the last 2 or 3 years. Really like to see that annual EPS up into all-time high territory versus the last 8 years. I really like that. Okay, so I'm not just looking at the technicals, I'm trying to bring the fundamentals into it as well. And is the stock in a strong group and or theme, or emergingly strong group or theme? Okay, there's a lot of things that go into this. Okay, you're not just looking at, oh, it's a shakeout tomato on the 10-day, 21-day EMA, and I saw a YouTube video on that, I'm just going to buy it. It's not. You got to do a little bit more work than that. Okay, you got to do a little bit more work than that. Then if we take a look down here, these are the earnings, sales, and after-tax margins. Okay, on a year-over-year basis. Specifically here, looking at the earnings and the sales, okay, the earnings are up 36% year over year. That's solid double-digit growth, and the sales are up 41%. Okay, year over year, that's also solid as well. I like to see a general improvement in the after-tax margins that the company is displaying as well. So I like bringing in the fundamental as well. So the EPS there, looking for solid earnings and sales growth coming through, the improvement in the relative strength line, but then dialing in the pattern recognition and the reference points of the key daily moving averages to look for that hammer, that doji dragonfly, that Takuri line around 1 or more key daily moving averages. That's in what I call the shakeout demand tail, and then either targeting it with a buy stop limit order, so I'd be buying it through the high, stop loss place underneath the low of the day, potentially by a cent, maybe a little bit more, depends on kind of the setup, or looking for an opening range breakout. If the stock takes out the high of that shakeout demand tail, there's strong action, preferably intraday relative strength as well, but we will avoid that rabbit hole for the purpose of this YouTube video, just to again help you visually understand what is a shakeout demand tail, where am I looking for it to form around key daily moving averages. So thank you very much for watching. Hopefully that video there was useful for you. Thank you very much for supporting the YouTube channel, and as always, I look forward to seeing you in a future video.